It is time to take a look back on what happened in 2020 for the corn crop and look forward to 2021 estimates. I'm Bryce Duskett with the Rural Radio Network, and today we're joined by Jeff Peterson. He's the president of Heartland Farm Partners as we do the 2021 Corn Outlook. Jeff, thanks for being here today.
Oh, it's great to be here. It's always fun talking about the markets, especially as we start factoring in some new factors as we go into this next year.
Got new factors in terms of data, a lot of things to digest, so let's jump right in today and talk about how the 2020 corn production compared to previous years.
You know, overall, as we take a look, we came in at 14.182 billion. That is the fifth largest crop that we ended up having going all the way back to the 02 crop year. The interesting part, though, is that in the last report in January, they did lower the yield from the 175.8, they lowered it down to 172. And as a result of that, it ended up, we were concerned that the crop could get smaller, but overall, a good crop overall.
Let's talk about demand, starting with feed.
On the feed demand side, what's interesting to see, and this particular number, we come in at 5.65 billion. You can see that we're down from the 5.9 billion last year, but overall the feed demand is staying strong, and that's an area that probably will be one of the later ones to physically drop as we go forward, as we have to ration a little bit of demand here, but that's one that we'll keep a close eye on going forward.
Let's shift a little bit, still in the demand category, and talk about ethanol. First, remind us how important the ethanol market is for the corn market and what some of the factors you're watching as we enter 2021.
Yeah, as we take a look at the ethanol side, it is extremely important, and it's an important not only as a big source of demand for the corn market, but it's so important feed source. And as we dig in and take a look at, the first thing you'll notice, we had this big drop. What this big drop showed in the early part of 2020, that was when we had COVID come into play. Overall, though, what I want to draw your attention to year to date, and when I talk about the year to date, what we're talking about is from the crop year to date, going back to September 1st and going all the way back for the 2000 crop year, that'll go through August 31st, we're down 7.9% year to date. Now, USDA believes we're going to be up 2%. But something I want to keep in mind here, if we sit back and look, if we would continue at this level we're at right now and continue it for the rest of the year, we actually would come in about 6% above last year. And a lot of people will say, well, how's that possible? It's because we don't anticipate having this big drawdown that we had here because of COVID.
There's a lot of global competition in the corn market. How are exports holding up?
You know, overall, as we take a look at the export side, we're holding up really well. If you take a look at it, what I've done is I've went all the way back to 02 across the bottom. You can see that this is set up in millions of bushels. So our current estimate is 2.550 billion bushels. And you can see that's by far is going to be the largest amount of exports we had. So overall, the demand on the export side is really good. And as a matter of fact, USDA in the last report, they actually lowered that number and they brought it down to the 2.55. We actually think as we go forward, we could see that number actually increase price. So a couple things that we're going to be watching. That safrinha corn crop is going to be extremely important coming out of Brazil. And what's really interesting about that, that's a crop that hasn't even got planted yet. They're just getting the harvesting started on the bean side down there. First harvesting on beans started at the end of December, about the 28th of December. That crop on the bean side's running about 2 to 3 weeks behind. So our concern there is that could end up getting the safrinha crop in later, which means it could push it into the time when it's filling ears and pollinating into a little bit warmer, dry period. Now that normally happens every year, but we're going to be pushing it a little bit later. What that means for exports is that if that crop out of Brazil and the safrinha crop doesn't end up coming in as we think, we'll have to raise that number up as we go down the road.
So overall, how would you categorize the U.S. corn demand as it sits today?
You know, the U.S. corn demand actually is holding up really well. If you can see, it's not our largest demand number. We've put this 2020 crop year, we put this in red at 14.575 billion bushels. We would have been higher back here in 2017 at 14.7 billion, but you see, even at these prices we're having right now, we're really dealing with almost near record demand.
So we shift from the demand side to also talk about the supply situation. How would you categorize those two and their relationship?
Yeah, as we sit back and take a look at it, the easiest way is I want you to draw your attention what this says, U.S. corn ending stocks. So let's first identify what those ending stocks are. The ending stocks are setting here in orange, and what that is that is the total supply minus the total demand ends up giving us our ending stocks. That gives us a way to compare how big a pile is left over at the end of the crop year each year. But in order for us to really dig into that and really understand what does that mean for price, we got to do a small calculation price. And that what we have to do is we got to calculate this stocks to use ratio. And the stocks to use ratio that I've got here in blue, what that is that's the ending stocks divided by the total demand. Now, the reason we want to calculate that number and come up with this blue line on here is because once we do that, we can compare that stocks to use ratio all the way back for every year, and then that gives us a way to be able to say under similar situations, what would we expected for price. So what you'll notice on the stocks to use percentage, we're coming in for the 2020 crop year at about 10.6. The last time we would have been this small, we'd had to go all the way back to the 2013 crop year.
How has this changed over the past year?
Well, that's one of the things that's been really interesting to watch is that as we've moved through the crop year, actually this number, if we take a look here, left-hand side we've got the monthly ending stocks, right-hand side we've got a stocks to use percentage. You can see when the first estimates for the 2021 crop year or 2020 crop year actually started, which would have been back in May, we were forecasting all the way over to 3.3 billion bushels. But what you can see has actually happened here is that in our latest estimate, we're all the way down to 1.5 billion bushels. Now, our thing that we want to look at though, so we can compare prices from year to year, we want to go over and look at how has that been for a change on our stocks to use percentage. As we're sitting here, 22.5% stocks to use is where we'd have been back in May. And what you'll notice is that we're actually all the way down to 10.6% stocks to use. So we've had a general reduction that's happened. Multiple reasons for that, Bryce. A lot of it came about because we ended up seeing a smaller yield and we ended up having a little bit less acres also.
Well, let's change gears a little bit, Jeff, and talk about the 2021 crop. Hard to believe we're in a new year and it's already going through January here. But as we sit today, what are some of the factors you're going to be watching for the supply and demand?
Well, the one we've already kind of started to mention, we talked about the amount of safrinha corn crop on the production side. We started off talking there, and so that's an item. And in addition to that one, we're going to have to watch and see what happens on the projections. If the weather improves down there on that safrinha crop, we'll have to see. We're also looking at the trade with China. And U.S. has got a lot of corn that's actually sold to China on the corn side, and that's not something that we normally see. But actually we've got some good amount there. We're going to be watching very closely to see, do those bushels, not only since they've been sold, do they also get shipped? And the big question is, do they end up buying more? And the question that we always have to wrestle with when we see some big numbers on the books is that, did they buy early or did they buy more? And that's what the market's actually wrestling with now. COVID-19, that continues to be a concern for us out there. And the reason it's such a concern, I would say, gets back to what it means for actually our miles driven. Because right now, miles driven are down about 8.9%. And as a result of that, what does that mean? That means we have less gasoline that we can blend that ethanol into. So we'll continue to keep a very close eye. We are encouraged though on the COVID side because of the vaccine that's out there that we think we'll start seeing some things come back to normal, but margins are kind of tight right now on ethanol. So the outside markets, what we've actually seen here lately is that we've actually seen the markets on the crude oil side start to work its way a little higher. That's brought us a little bit better prices on the ethanol side, but unfortunately because of the higher prices on the corn side, that still made the ethanol margins kind of tough. Soybean prices, those soybean prices have been really moving up quicker than what we'd even seen on the corn side. And that's really been a function of that we have to ration demand on the soybean side. And as a result of that, we have to watch soybeans and see, not only are we getting the bushels sold, which we are, as a matter of fact, right now, we've got over 94.5% of the estimated sales from the export side have already been sold. And normally we would only be about 80%. So we've got a large amount, but what we're watching close, Bryce, is to see whether or not all those bushels end up getting shipped. Because what the market's kind of fearful of is that once we start seeing more bushels come from South America, and Mato Grosso's getting started, What the concern is that will they start canceling some of the U.S. purchases that they have on the books? Our belief, because China is increasing their hog herd, some latest numbers came out and said as of the first of the year, their hog herd, think about this, compared to a year ago is up 30%. And so why is it up so much? Well, it's because they had a big pullback from the African swine fever. And as a result of that, that means that they do have more demand out there. So that means more demand for soybeans, turn it into oil, turn it into soybean meal. So we want to make sure that ultimately those bushels do get shipped, but we're pretty confident they will. And then the big one gets to be that 2021 planted acreage. And how many acres are going to go to corn, what's going to go to beans, how much is going to remain unplanted. So those are some of the things that's going to have some big impacts as we move into this 2021 crop year.
Well, there's got to be a lot of questions about what's going to be planted. And I know you like to think about it in corn, soybeans, and wheat and comparing that acreage. So what are you thinking as we go into 2021? What are farmers going to be planting?
Yeah, so what we end up doing, and here's the process we'll kind of walk through, Bryce, is that we'll walk through and say, across the corn, soybeans, and wheat acres, what do we expect to see for some changes? Okay, so we start up here in the top, and how we've got this laid out is that on the left-hand side, we've got possible changes in 2021, the different categories. Over here on the right-hand side column, this is going to be what we expect to see for changes compared to the 2020 crop year. And then down below, we summarize it, and we'll talk about what that means overall. Couple of areas that we want to bring to your attention, starting first on the CRP. On the CRP side, we're setting at 21.9 million acres. We don't think we'll see much of a change in the CRP. The reason we don't think there'll be much of a change is that when they've had open enrollment this past year, and even though the cap is bigger than what the 21.9 is, they didn't fill all the way up to their cap. We also don't think we'll end up seeing more acres go into CRP because of where the prices are at, and people will look at, well, I could make more money producing on it than putting it at the current CRP rates. We also then have to have a discussion about the prevent plant. We believe that this last year, prevent plant was 8.934 million acres. We think we'll come back down towards the 2.4 million acres, and we'll talk more about that. That would bring in about 6.5 million acres into the corn, beans, and wheat category. Now, sorghum acres actually look like they're going to increase. The reason that those are going to go up is because China has been a steady buyer on the sorghum side, and that's driven up there. And sorghum's based off of corn, but what it's done is it's driven up the price on the basis side. And we think there could be about 1.5 million acres of sorghum more than it would have been last year. We think about 1 million of that is going to come out of the corn, beans, and wheat. Not all of it will, but about 1 million will. Oats and barley we think are going to remain unchanged. Cotton we think could remain unchanged. The other area that we have to be aware of is those double crop soybeans. We think we'll see an increase in the percentage there from 5% up to 8%, and that will actually amount to about 3 million more acres of soybeans from the double crop side. We also, every time we have a bounce up in price, the other thing that we always end up seeing is that we end up seeing additional acres get brought in. Maybe some additional pastures get tore up. Maybe some fence rows get taken out. Maybe some farmsteads get removed. And we think that'll bring in a couple million acres. So overall, we're looking for an increase of 10.5 million acres across corn, beans, and wheat. Now we go back and we add that to where we were at in the 2020 crop. 2020, 218,252,000. We add the 10.5 million acres to that. That brings us up to 228.7 million acres. So that's what it looks like across the corn, beans, and wheat so far.
Talk to me more about the prevented plant number you're predicting. Kind of a big decrease year over year.
Yeah, it really has been. And that prevent plant number, and let's just kind of go back and spend a little time talking about that. Our data, what we've got it all the way back to 2007, all the way through our forecast on the 2021, which we have in red. A couple things you'll notice, prevent plant this last year for corn, beans, and wheat was 8.9 million acres. Now, had we not had the big number, 18.1 million acres back in 2019, there'd have been a lot more talk about that. But there wasn't as much talk about it. Why did that happen? Well, the reason that we ended up seeing that happen is we had a lot of wet conditions up in North Dakota. We ended up having those wet conditions also in South Dakota, parts of Minnesota, over into Missouri. And so we saw those acres come up. Normally, if you look at, we've got an average here, 3.84 million acres from 07 through 2018. We think this year we'll actually should bring that number down to about 2.4 million acres. Now here's the reason we believe we should bring it down to 2.4. Right now we've got some very dry conditions. Our subsoil moisture is very dry. And as a result of that, what we believe is if we look back in time that's comparable, 2012, we got all the way down to 1 million acres of prevent plant, okay? Another year that we just saw that was really dry back in 08, got all the way down to 1.5 million acres. So what we can see is that we don't think we're going to get all the way down to the 2012, but we do think it's reasonable to think that we're going to be way less than what our average is. So that's why we're sitting at the 2.4 million acres on the prevent plant side.
Jeff, talk to me more about the double crop soybeans. Where in the country does most of that happen? And you're predicting a pretty big increase year over year.
Yeah, we are predicting a big increase. So if we sit back and think about where that happens, we see some double crop beans happen in Kansas. We also do see a little bit of it happen over in Missouri, but we see some larger amounts actually happen over in Illinois and Indiana, and that's actually following up on the soft wheat. Probably the best way that we can talk about this is go back and look at how it's changed over time. And what you'll notice is that when prices had came down and kind of were on their way of going down in 2010, we got all the way down to where the double crop beans represented about 3% of what the total supply of soybeans on the acre side were. The other extreme to that, though, you'll notice when prices got really high in 2012 into 2013, we got all the way up to 10%. So our starting point is we go back and look at where were things last year. Okay, last year we were at about 5%. We believe because prices are coming up, we don't think they'll get all the way up to these levels we would have been back in 12 and into 13, but we think we could see that level go up to about 8%. So when we go from 5% up to the 8%, that's going to end up giving us that increase in acres that we were talking about in the double crop soybeans.
And on the CRP side of things, you're not expecting much change there.
No, we're really not expecting much change. It's been interesting, though, Bryce, to watch how CRP has changed, though. And you think about that program actually peaked out back here in 2007 at 36.8 million acres. And as prices went up, the thing that we ended up finding, and this would be from 2008, and as we went 2010 and 12, the thing you'll notice is that there was acres that were coming out of the CRP and they were going into production. We ended up having the 2014 Farm Bill come out. That set a cap at 24 million, and you can see as a result we got up really close to that as we were coming in here in 15 at 24.2 and 23.9 and 16. But we have gently lowered those numbers, and basically what that's telling us is that as we've had acres come out on those open enrollments, there hasn't been more acres that have came back in. Now what's interesting about it, though, you'll see we've identified on here, according to the 2018 Farm Bill, what we've got is that the cap increases. So right now the cap for 2020 was 24.5 million acres. It then goes up for 2021 to 25, for 2022 at 25.5, and then up to, on 2023, we're up to 27. But because of where prices are at, we just don't really think we'll see much of an increase at all or change in that CRP number.
So knowing all this, how do you think corn and soybean acres will break down in 2021?
Yeah, that's what we're really wrestling with right now. And part of our process here is we just want to walk through that and get a good feel, because that becomes our foundation, those amount of acres. And the market will spend a lot of time talking about that. It's already getting thrown around out in the industry. The first time we'll see some official numbers out of USDA will come that are survey based, will come out of the Planning and Intention Survey, and those results will be reported at the end of March. So the easiest way probably for me to show this is that we've went all the way back to 2012 crop year, all the way up through 2021 on our estimates. We've got the rows in here laid out on corn, soybeans, and wheat. And what you'll notice is that then we put the total amount of acres across the bottom here. So starting first on 2020, This is where we had that 218.252 million acres total. Over here on 21, we added 10 million acres to that. And what you'll notice is that 10.5 million acres, you'll notice that on corn, we're looking at going from 90.8 million acres up to 92.319. That'd be a 1.5 million acre increase, okay? On the soybeans, we're bringing it up 7.5 million acres. That gets us up to 90.5 million acres from the 83. And then on wheat overall, and this is one we're going to have to watch. Of any of these all can change depending on what weather does, but also depending on what the soil moisture conditions are. We're probably the most uncertain in here yet. I mean, our degree of certainty isn't great right now on this price yet. We're just getting a good feel. I think wheat could change yet, and these on corn and beans are yet to be determined also. An interesting point though, just talking a little bit about soybeans here. And if we take that 7.5 million acre increase, that is what we need to have in order to just keep our stocks steady. So what it really says, if we have any weather problems that happen on corn as we go forward, or on bean side going forward on the weather, what that means is that we actually probably need more acres than that to just give us a little bit of cushion. So there's going to be a little bit of battle in regard to getting the acres into the right crop.
So Jeff, talk about how these numbers are for 2021 are going to compare to previous years.
Yeah, so we take a look, and as we put together our individual estimates by crop, one thing we always want to go back and check against and say, you know what, how did we actually compare to past years? And I think the easiest way to do that is to go back and what we've done here is we've broke it down by crop. We've got corn here in blue, we've got soybeans here in red, we've got wheat here in green. And I'll start with soybeans first. What you'll notice on soybeans is if we go all the way back over here, we'd have been up here at about 86 million acres back in the early 80s. And you'll notice we came all the way down and we actually bottomed out here in 2020. So we're going to have a slight uptick on acres, so you can see this is just slightly off the lowest amount we'd have had on wheat in over 100 years. What you'll notice up here is that on the bean side, this won't be the most beans we've ever produced or the most acres, but it's going to be really, really close. On corn, we can see that we actually had more acres back a few years ago. But we're coming in at the 92. You can see an uptick from where we've been in the past, but a lot of the reason for this has been because of the prevent plant acres we've had past years.
So that's corn, beans, and wheat individually. If we look at that as the three of them total, how does that compare?
Yeah, so we always want to look at that too and say, does this make sense? Because we can all of a sudden, if for some reason we build these estimates wrong when we compare them, as we bring them all together, it may be, wait a minute, this doesn't make any sense. So we go back and we look at, we bottomed out here in the 2018 crop year in the recent time frame at about 211 million acres. The reason that was so low is because of the amount of prevent plant that we had there. We can see we brought some acres from the prevent plant, came back into production, but not all the acres got back into production. And you can see at the 228,752, that's still down from our peak where we'd have been back in 14 at 230,714. So overall, we feel good when we take a look at not only the breakdown on how the acres compare by commodity, but when we bring them together all and aggregate them, we think this is a reasonable estimate at this time.
Earlier we talked about ending stocks. As we apply that to soybeans, how is that going to play a factor into what we're looking at in 2021?
Yeah, part of the reason we include the soybeans, because some of it is we're talking about acres, and we're ultimately going to end up with what we have for a price on corn. But part of the reason that we throw in the soybean discussion is to be able to get an idea of what is corn going to have to be able to compete with. And so I draw your attention back to the same chart we'd used before. It's our U.S. ending stocks, which we have in orange. It's our stocks to use percentage, which we have in blue. And what you'll notice here is we're setting right now for the 2020 crop year at about 3.1% stocks to use. But I want you to think about this just a little bit differently. And if I was able to show you, and I don't have it on this chart, but if I was able to show you for the January report, okay, how did this compare to other January reports every year? what you would see is that actually this is the tightest at the 3.1%. This is the tightest stocks to use number for the January report that we've ever had in history. Now, if you remember, let's just walk back through what that means for price. The tighter we physically get, or the lower the stocks to use percentage is, what that means is a higher price. So as we physically lower that stocks to use, prices go up. So that's why we're looking at corn has a battle going on with soybeans to make sure it gets the acres that it needs, and soybeans also get the acres that it needs.
So Jeff, has the U.S. ending stocks number changed throughout the year?
Yeah, we've also seen that adjust. And that's not too uncommon. In past years, we've always seen quite a bit of adjustments happen with ending stocks over time, but this has been a rather big one, Bryce. So if we go all the way back and look here, we started off back in May, and we started off around 400 million bushels. And you can see as we moved through the summer, we got to a point in July where we were all the way up to 610 million bushels of ending stocks. And then what you'll notice though is as we went along though, we drew that number down, and we're now all the way down to that 140. So a lot of that adjustment there came about because we did see adjustments on the acres a little bit. We also saw adjustments on the yield side, and also because of the strong demand and the fact that China continued to increase the size of their hog herd and had more demand out there, the demand side also played a part in bringing that ending stock number down.
So let's look at this all big picture for 2021 for U.S. corns. How is supply and demand going to look?
Yeah, and that's what we want to dig into and take a deeper look at. And so the easiest way to do that is what I've laid out for you. If I start clear over here on the left-hand side, what we've got is that we've got all the different categories. We've got acres planted, we've got beginning stocks, we've got our ending stocks, stocks to use. And then I've laid out for comparisons for you from 2013 through our estimate out here all the way on the 2021, okay? And what you'll notice is we started putting this column right here is the one we want to pay attention to. So we went ahead and raised our acres up 1.5 million. We're going to start off with a 180 yield. Now what that 180 yield represents is that represents something slightly below trend. USDA gave us a little bit of heads up or a telegraphing what they may use in future reports. They came out in their baseline numbers and they used a 180.5. We backed that off slightly, but actually, Bryce, I think they'll probably, when they come out in the May report here, which will be the first time they'll report on the 2021 crop, they'll probably use a 180.5. We ended up keeping our beginning stocks, that'd be the ending stock number from the 2020 crop year at the 1.552 billion number. I think actually we'll see that number go down as we go forward. I still think we see our exports not go down, but I do think we'll see them go higher. We also, if you'll notice here, we did bump the demand number for ethanol. 2020 is 4.9, 2021 at 5.3. The reason that we bumped that number on the ethanol side is we believe we're going to get back to a little bit more normal driving because of the COVID getting better and people getting back to more normal. We also do think that as we look across the world, as we see energy prices come up, we also do believe that we could end up having maybe a little bit more export demand out of the U.S. to other countries that could help us on the use of corn going into ethanol. We actually kept the food, seed, and industrial numbers pretty steady from where we would have been back a few years ago, way above where it had been last year, but most of that's accounted for in our ethanol number. You can see we kept our ethanol or our export number pretty strong. The reason we kept that pretty strong is that we actually feel that going forward, we think China's at a point they're going to continue to need more bushels for their hog herd. We know that the world population continues to increase, and as a result of that, that I think gives us the ability to have maybe even a higher number than that in the 2021 crop year. Overall, we can see our ending stock number comes in at 1.874. So what that tells us, and that's in billions of bushels, 12.6 stocks to use compared to 10.6, all of the things being equal, that would tell us for the 21 crop year, we should expect lower prices than what we had for the 2020 crop year. However, what we have to wrestle with here is that will all those acres get put into corn, or will some of those end up going into soybeans? The other thing that we've got to wrestle with here is that are our prevent plant numbers going to turn out like they are? So that's another item that we're going to have to watch very closely. We also believe, as I mentioned before, that beginning stock number, the 1552, which is that ending, that's probably going to come down some more yet. So that's going to pull this number down some, Bryce.
Okay, Jeff, we've gone through all this today. I have not asked you price-wise yet, but get out your crystal ball and tell us what you're thinking for price-wise, and perhaps better than just a guess on a crystal ball is using data with that. I know that's what you like to do.
Yeah, we definitely do, and the key to using that data and how we arrive at some of our forecasts is we take that stocks to use percentage and we compare that and correlate to what that has meant in past years. So let's just start off this discussion, and what we have up here is a monthly corn chart. So when we have a monthly corn chart, what you'll notice is that each one of these individual bars, like we have right here, that represents what the trade has happened for the month, okay? And what you'll notice on here is that we did trade all the way up to 541.5, okay? And what this shows is that this is showing on the nearby contract, which means sitting here today, that would be based off of the March futures price. And these are futures prices. If we look back in time, as we were back in 2012, the highest we've traded on corn, not adjusted for inflation, would have been $8.43. So the first thing we notice here is that the market, as we were coming in through the middle of 2020, got down to all the way down to 301, and then we've had this run up, okay? So as we look at, we broke through this major resistance level here at 439. We would then go over here and say that would have been resistance at 519. We broke through that. And so now what we're looking at is that we'd be looking back over in here as some resistance levels in the probably the mid 550 type area. The interesting part about this though, Bryce, is that when we look at, and that's what the market action has done, right now I would say the market's a little bit overvalued for what the underlying conditions are. For the current stocks to use percentages, our numbers would suggest $4.75 to $5 is probably fair value. So for us to go from the 540 to the 550, which we think it still has the potential to do, and really we're not 540 today, but that's where it peaked out at, what would have to happen is we would have to see additional demand show up, and the easiest place for it would be on the export side. Now, we got to watch very closely the ethanol side, because we do get concerned about the ethanol industry, and the fact that if prices do go up, that will be probably one of the easier ones to ration. But we think going forward as we get a little bit of dryness, and that's another concern that we haven't talked a lot about here in the U.S., and the fact that our subsoil moisture is physically getting very dry, and as a result, last year we had very good subsoil moisture. This year we definitely don't have that. And so what we're looking at here is that we think something in the 550 area on the nearby futures we think is possible. Longer term, as you go down the road though, as we get up into those areas, we got to be very careful, and we have to make sure that we're getting ready to make some sales.
Well, Jeff, we finally get to this chart, but it's so important to break down everything that led up to this on today's presentation, help people better understand the markets, and that's what you're passionate about doing, both students and producers out there. If people have questions, they want to get in touch with you, perhaps they want to follow you on Twitter, what are some of the best ways to get in contact with you? Yeah,
you can reach out to me by phone at 402-366-4694. You can go ahead and follow us on the internet at heartlandfarmpartners.com. Click on the sign up button to be able to get some of our free daily commentary delivered by text or email, and that helps explain some of the reasons why we're focusing on the different numbers that we are. Or you can follow me on Twitter at JeffPeterson01.
Thanks again, Jeff, and thank you for watching today. He's Jeff Peterson, the president of Heartland Farm Partners, and I'm Bryce Tuskett with the Rural Radio Network.